What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're doing another stock market technical analysis update. But before we crack open these charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel if you want to follow along on all of my updates. Now, first up, we're taking a look at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so as you all probably know, today was the last trading day in August, and we didn't really see anything that surprising. We did see the SPY ETF close down about 0.36%, and if we switch over to a 1 hour chart, we see the majority of that sell-off coming in the last 1 hour of the trading day. So a little bit of a scare sell-off to end the day to question how the stock market is going to start the month of September tomorrow. So going back to the daily chart, we still see a nice bullish close above the 5 EMA, and we still see this 5 EMA trading well above the 13 EMA, which tells us that we still have this very strong bullish trend. Now, if you remember from the weekend video, we did add this new magenta trend line, which is going to potentially call a very critical market top. So if you're new to the channel, just a quick refresher here that this trend line called the top in February of 2020, as well as calling the top back in January of 2018. Now, this trend line carries more significance than that, as well as also calling a bottom and a support level back in 2009 and 2010 before ultimately breaking down and turning into a resistance trend line. So we're watching this trend line closely right here on this channel, and we do see today's price action got very close to hitting that trend line, which is a little easier to see here on a 1 hour chart. You see that that wick was only about 50 to 60 cents away from hitting that trend line. So did we potentially see the top of this market of the S&P 500 in the short term? That is to be determined, but right now we're not calling a top, and we're strictly just watching this trend line to see if it's going to show us a critical data point of if it's going to be resistance or potentially break out above it and potentially turn into support. So right now, going into September, we do need to start considering the options of a potential correction, and we do believe that we're concluding the fifth wave of our Elliott wave analysis, which means we're going to start expecting that ABC correction. In any event that we do get a correction at these price target levels, we are expecting to see a pullback into a bounce into a further pullback. Now, that is the ABC correction, and that could continue the trend after we see a correction back to the upside. However, right now we're strictly following the price action, and we're strictly following these technical indications, and we still do see a lot of signs of bullish momentum with the price action still closing above the 5 EMA. We're still trading near the top of the Bollinger Band, and we still see these moving averages in a very bullish stack up, with the 5 still trading well above the 13 and the 13 still trading well above the 20. Now, we still do have these gaps below us, which are our support levels, and those are at the $340 level and the 330s, and then of course the bottom one we have here is 327. So from today's close, in any event that we did get a correction to bottom of support, that's about a 6.5% downside. So I would say at these levels, with our next upward price target of $353, we do seem to have a lot more downside risks to upside potential. So we have about 1.3% to the upside to hit our next price target, but we have 6.5% to the downside at our bottom support level. So there's also warning signs going on in the stock market, which I would say manage your risk with knowing that as well. So right now, if you're in this market, you still have no reason to sell out of your positions, but there are rising concerns that if you're not in this market, I would not recommend going long at this point in time. So tomorrow will be the first trading day of September, and we could learn a lot in the first week of September. However, we really should see an increase in volume after the Labor Day holiday, which is going to be the first trading day starting on September 8th. Now, I have this vertical line drawn into September 9th because I think we could see some volatility enter the market after that holiday weekend. So pay attention to the dates and pay attention to the volume. And we did see today, volume didn't seem to be that abnormal. However, we did have higher volume than we did on Friday with a red day. So that could be another warning sign that we could be starting to see volume increase on down days. When we start to see volume increase on red days, we need to pay a little bit more attention to see if that's going to be a technical indication that we have increasing volume on lower price action. But right now, we still have the price action closing above the 5, and we still have that bullish trend. So we're going to give the benefit of the doubt to the upside price target of $353. So now let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF here, which we call the triple Qs. And we see that the triple Qs had an amazing day today, closing up 0.8%. and breaking our upside price target of $292, closing well above it at $295. So when we break our price targets, we look for our next Fibonacci extension levels. And on the Nasdaq 100 triple Qs, we have the next level up here at $300. So the Nasdaq 100 was trading very extensively above its monthly Bollinger Band. And if we take a quick look at that again by switching to a monthly chart and switching this over to a line chart, and if we measure the move above the Bollinger Band that we closed the month of August in, we traded above the upper Bollinger Band outside to the 9% mark. So that is extremely overstretched valuations as far as the Bollinger Bands are concerned on a monthly chart. And we do need to respect that these prices are starting to get very extended to the upside. Now, if we also take a look at the RSI, we do see that we have somewhat of a divergence with going back all the way to 2018. We do have this negative sloping RSI pattern with a positive sloping price action. So while price has increased from January of 2018 to this month's close in August of 2020, we have seen consistently lower RSIs printed on a monthly chart. Now that is what's called a bearish divergence because the price is moving up, but the RSI has actually been moving down. And this has now been happening for over 2 years. So this is strictly just looking at the technicals and looking at what's in front of us. This could be a significant change in market sentiment coming with these valuations getting so far stretched to the upside. It would not be surprising to see a multi-month sell-off if and when we do see a sell-off begin. But that is more of a macro level view because we're looking at a monthly chart. So on this channel, we usually pay attention to a daily trend, and you will not see that same trend on a daily chart at this point in time. So right now we're going to trade with what's in front of us. And right now we still see very bullish price action closing well above the 5 EMA, forming new all-time highs. And we still see this very strong bullish upward trend in the moving averages with the 5 way above the 13 and the 13 way above the 20. So we're also still trading at the upper Bollinger Band, and this market could continue to stay irrational and overbought and continue to short squeeze and go parabolic and further inflate for as long as it wants to. There is no rule that the market has to sell off just because it's overvalued. So while I'm saying don't chase it at these levels, I'm also saying don't assume we need to have a correction and a sell-off just because we're at these levels. There's a fine line in the stock market as a trader that you walk. And if you're looking at the technicals and you're staying objective, you have to give the benefit of the doubt to the upward bullish momentum trend right now. And this is not a trend you want to try to call a top in or that you want to try to short. If I scroll back and I show you this upward move in the Nasdaq 100, at any point in this market, you could have compared the stock market to the economy and said that the stock market is overvalued and tried to short this market. And while you potentially could have caught one of these highs and profited off of that short, if you held that short position for any length of time, you could be down huge right now. So I can't stress it enough. If you're new to trading, do not try to call a top and do not try to short this strong upward momentum bull market. And as you're seeing this trend continue, it could continue to stay irrational and could continue to inflate for as long as it wants to. So right now we still see very bullish price action on the Nasdaq 100, and we are still paying attention to the trading action that we're going to move into September to see if we're going to see signs of a possible reversal. So next up is the Dow Jones Industrial, and we are looking at the DIA ETF here, and we do see Dow Jones did not have a great day, closing down negative 0.84% today. Now we did close right above the 5 EMA still, so we're going to still give benefit of the doubt to bullish momentum and bullish price action, and we're going to continue to expect to see the DIA ETF come up here and close this gap, which is also our upper price target of $289. So just another reminder, we did see the upward price targets that we gave on this channel be met on the SP 500 and the Nasdaq 100, but we have yet to see our price target on the Dow Jones be met of $289. With this trend and these technicals, I'm still fully expecting to see the DIA ETF come up here and close this gap at $289 before we see a correction. So I still don't think we're going to see that correction just yet because the Dow Jones is not telling us that it's hit its upward price target yet. Now that's just my opinion. There's no guarantees in the stock market, but just looking at the technicals and staying objective, we do see bullish trend and we do see bullish price action. So we're going to give the benefit of the doubt to the Dow Jones coming up here and hitting our price target. Next up, we have the VIX, which is our fear indicator. And as I said this weekend, we did see a trend reversal in the VIX. And if we zoom out here, you can easily see that the VIX was in a very strong downtrend. However, we did see the VIX have a pivot bottom and we did see the VIX have the 5 EMA cross back above the 13 and the 13 cross back above the 20, which, if you remember me saying, that is a trend reversal. And we saw the VIX go up 15% today, which should be absolutely no surprise to any of you watching this channel. When we see bullish momentum enter a stock, or the VIX in this case, we would expect to see that trend continue and that momentum to continue in the other direction. So we saw the downward trend momentum end, and now we're starting to see the bullish trend momentum pick back up. So this is the number one warning sign that we're seeing in the stock market, is that we're seeing the VIX continue to elevate. Even on days when the stock market is going up, we're seeing the VIX go up right there with it. Now, that is usually a sign that there is something going on underneath the stock market, because rookie traders do not pay attention to the VIX, and most of them probably don't even know what the VIX is. So this is a huge warning sign that we're seeing all of this bullish momentum pick up in our fear indicator, and that's going to tell us to be a little more defensive and be a little more prepared in any event that we get a correction, because the VIX is flashing warning signs right in front of us. So with this trend, I'm going to give benefit of the doubt to the VIX to continue to increase, and the VIX could increase very rapidly, which could tell us that we're about to take the elevator down on the stock market. Remember, taking the stairs up on the gains and the elevator down on the losses is still a highly likelihood. As much as we see the VIX increasing, that's increasing volatility, which means we could see those -5 or -6% days again. As the VIX gets closer to the 30s and 40s, that is when we're going to start seeing volatility increase, and we're going to start seeing swings of 4 to 5% in the stock market every single day, like we saw back in March. So pay attention to the VIX. It's a very important indicator, and it's flashing warning signs for everybody paying attention. Next up, let's start looking at the sectors that drive the stock market. And first up is our financials. And we do see that the financials had a very bad day today, closing down almost 1.2%. Now, we do have to give benefit of the doubt to the financials still being in a bullish trend, because we still have the 5 EMA above the 13, and we're still in this consolidation wedge pattern where we're trying to see if financials are going to break out to the upside and test this 200 simple moving average. And ultimately, we're waiting to see if financials will form a new higher high. Now, I would consider a healthy market requiring the financials to form a higher high. And since we've yet to see that, it is a little concerning. So I would like to see financials break out above the 200 simple moving average and form this higher high that we have yet to see on the financials. However, in the other direction, if we see financials come down and form a lower low, that will be a very concerning sign in the stock market. And it will likely mean that we're not going to see the SP 500 continue to go higher for the remainder of the year. So it's very important to pay attention to what the financials are doing right now. And that is why we're so closely watching to see if this financial market is going to break to the upside or the downside out of this consolidation wedge pattern. Next up is, of course, the industrials. And we do see the industrials also had a bad day today, closing down -1.24%. We do see the price action closing below the 5 EMA, which is not a great sign. But we do have the bullish momentum trend, with the 5 EMA still trading above the 13 EMA and the price action still trading above the 20. So the momentum is still in the bull camp for the industrials, but we are starting to see the price action come down and close below the 5 EMA, which could be the first sign of a reversal. However, one day does not dictate a trend. And of course, we're going to wait a few more days to see how this plays out. And ultimately, we're waiting to see if the trend reverses by the 5 EMA crossing below that 13 EMA, which will be our first sign that the trend is possibly reversing. But ultimately, I'm still looking for the industrials to continue to head higher until we hit that price target on the Dow Jones. Next up is the healthcare sector, and we see healthcare continuing to break out, forming new all-time highs, and we see that the 5 EMA is regaining its strength and showing separation between the 13 EMA. So with healthcare forming higher highs and higher lows, we still do see that healthcare is in a very strong upward trend, and I would expect to see healthcare continue this trend until we ultimately see signs that the stock market's ready to reverse. But right now, as you can tell, the Nasdaq 100, which is the technology sector, and the healthcare sector are leading the way, because financials and industrials actually were down today. So we are seeing the SP 500 still being carried by health and tech, and that trend can't continue forever. So we really are waiting to watch to see if financials and industrials can gain that strength and go up for the remainder of the year to carry the SP 500 to new all-time highs. Next up is the US dollar, and we're looking at DXY here, and we do see that the US dollar broke down below our support, which really isn't all that surprising because we did see the dollar in a very strong downward trend. and it really just consolidated its downward trend before ultimately resuming its downward trend. So right now, with the dollar breaking down below support and forming another low on the chart, I would expect to see the dollar continue to weaken. Now that's important to know because as we're following the dollar, we would say a weak dollar would expect to see asset prices continue to inflate, which would be hand in hand with stock market continuing to grind higher and going into that parabolic bubble move that we've been starting to notice. So unless we see strength returning to the dollar, I would not expect to see any strong correction in the asset prices, such as equities and gold. So with that being said, let's jump over to gold and see what's going on with gold. And we do see another bullish trend in gold, and we did break out of this consolidation wedge pattern. And now we see the 5 EMA breaking out and closing above the 13 EMA with today's price action on gold. So I do expect to see gold continue this upward trend. And because we expect to see that dollar continue to weaken and we're seeing gold breaking out at the same exact time, that does tell us that gold could be a great buying opportunity right now. So if you wanted to wait a little longer, you could wait to see if gold closes above the 20 simple moving average. But for me personally, the 5 going above the 13 and breaking out of this consolidation wedge is good enough for me. And I can now manage this trade with having a stop loss right here below support, which is the previous all-time high. So gold's looking very strong, and I would expect to see gold's bull rally continue now that we've seen the breakout of consolidation to the upside. Next up is Apple, which we cover on this channel because we say Apple is a market mover stock. And today Apple did have its stock split and it closed up over 3.3% today. Now this is absolute FOMO and euphoria because there's no reason that a stock split should have Apple going up in this parabolic move that we've been seeing. So right now, if you are a fan of Apple, I strongly do not recommend chasing this stock, and I would wait for a pullback into these gap areas and let it find support and buy off support. You will have a much better time trading a stock, buying it off of support in an uptrend than trying to chase it at the highs, as people are obviously FOMOing into these stocks that are splitting. Now to prove that point even more, let's go ahead and jump on over here to Tesla, which had another stock split, and we see Tesla went up 12.5% today. Now a stock split does not make a stock any more valuable than it was before the split. If anything, it's just hype and complete FOMO. So right now, seeing Apple and Tesla going up ridiculous amounts today on stock split news should be a huge warning sign that we're starting to see FOMO and euphoria enter back into this market, which, as you know, if you're a disciplined trader, that is usually the sign that we are reaching an important market top. Now, like I said, this doesn't mean we're at a market top, but it is another warning sign that we're seeing people FOMO into stocks simply because they're going through a stock split. Don't be the dumb money chasing these just because they're going up. If you're a disciplined trader and you have a strategy, go for it. But if you're just chasing them because they're going up and you have no idea how to exit a trade, do not chase these stocks. So to pull this all together, going back to the SP 500, we are still in a very strong upward trend, and we still do have an upside price target that has yet to be met at $353. However, we are still going to closely watch this magenta resistance trend line, and that could actually prevent us from reaching our price target, which we did see with today's price action struggling in that range. So there's a lot of excitement in the stock market right now, and September could be a very critical month, and we may see some blood in the streets, and we may see that correction this month. However, we're going to strictly follow the price action, and we're going to strictly follow the technical analysis on this channel, and we're going to remain objective. So please remember to smash that like button on this channel. It really helps me out, and I really hope these videos are helping you out. And subscribe to my channel if you want to follow along on all of my updates. Good luck trading, everybody, and as always, I will see you in the next episode.